it kind of.
We're live now. Yeah, our time went up. You guys, this is real work here we're doing
Good morning.
in the middle of our show. Good morning.
We've already had our good mornings like an hour ago.
I know. You and I are early risers, and we were on the phone about an hour and a half ago already. Yeah, I always tell people, you can call me. I wake up at 4:45 and get ready. I like to work out so I can have all of the anger and frustration, anxiety beaten out of me before I go to work.
I hear you. My goodness. I set my alarm for 4:45, but I don't like really start ticking and talking until like 6:15. So
Yeah. That's at home by the time I get home and showered, that's right, and get my first cup of coffee at 6:15. I do have some clients that will call me. Like I used to have one who would know that I was at the gym at like 4:45, and he would want to beat me to it. And
hilarious.
he would call me at 4:30, and I was like, dude, this is me time.
Yes, not right here. It's still dark. It's before hours, not after hours.
Yeah. Okay, you guys. So back to topic. Today is an amazing topic. It is closing costs and down payment. So those two that and I always talk about how everything in the mortgage world, I feel like, comes in pairs, right? So credit score and DTI. And so it's like two sides of the same coin. And so cash to close, we got down payment and closing costs, same thing. So we need to talk about one as much as we talk about the other. And I feel like everybody sees down payment assistance, zero down, and that's not the only money or cash that you will need to buy a property. So I think this is a very important topic to talk about, is cash to close and closing costs.
And what that includes.
Yeah.
Yep.
So, Gigi, what is a frequently asked question around this topic, or what do you find the most misleading?
So a big question, and people may kind of like shoot me because I'm really vague around this topic, because I hate getting people caught in a number, because people only hear what they hear and they don't know what goes into it. So, and then to try and explain it, it's just a little bit too much. Like, it's convoluted, and it's better to kind of go over an LE. And then most customers don't even understand what an LE is. They usually just sign it.
So that's a loan estimate, you guys. And what she's talking about is she doesn't want to just say a number. She wants to put it in the system, print out a loan estimate, which has all these cost breakdowns.
Mm-hmm. So a big question that I always get is, how much will I need to bring to closing? And it's like, okay, and that I get that at the pre-approval.
Before they've even found a house, right. Before they're even like in a price.
Yes. And that's where it can get misleading. And if I say $5,000, and then you find a house that has an HOA, or the taxes haven't been paid for a certain time of year, or, depending on what date of the month you close, your escrows and interest can be different. So there's so many things that go into the actual cash to close. We can definitely give rounded numbers and estimates, but I guess I like to give, if you're going to go on an FHA program, you're going to do most people do a 3.5% down. So that's a solid number that we can come up with, 3.5%. And then you have your closing cost. I round high at around 4%. So you put those numbers together, and that's your estimated cash to close. How you get there is a different thing. Like if you have seller's assistance, or if you're, things like that, that can kind of switch up or help you with what you need to get and how you need to get to your cash to close.
Oh my gosh, that is so true. So, we are you brought up an amazing question. We are in a market where we're having a difficult time getting sellers to contribute to closing costs. And I'm going to kind of like talk about why that was a thing in the first place. Let's rewind back 10 years ago exactly to 2011, right in the middle of the Occupy movement. Okay, I'm doing some like smoke here, so time traveling, you guys. And we're going to talk about the Occupy movement when there was a lot of houses on the market, a lot of vacant houses. There was a lot of foreclosures, and you get people that get these terms stuck in their head, like I'm sure you get a lot of people that are like, I'm interested in buying a foreclosure. And where did they get that from? 10 years ago, after the recession, when homes were in foreclosure and were getting bank owned and things like that, that is when all of this started coming around. And there were more houses than there were buyers.
Yeah.
So the pool of houses was bigger than the amount of swimmers. Okay. And now that pendulum has swung completely the opposite direction. Yeah. The pool is the same size, essentially. The pool is this big, but there are way too many buyers. They have outgrown the size of the pool of homes. So what does that mean? That means we got to start. People are starting to, and I use this analogy lightly, they start charging you to swim, right? They start, you get priced out. Like a lot of people want to swim for free. Well, that doesn't work this way. Now you got to pay your fair share, which is your own closing costs. Mm-hmm. Does that make sense?
And I really think, and I love how you approach things. Like, I had to tell someone the other day that, it's a needs-based. So if people still are getting sellers, I don't like to say like, go in it thinking that you can get that. At some point, people have to say, we go back to the puzzle and say, my credit's in a good place. My income is in a good place. My savings or assets are not in the best place. I still need to work on that. Mm-hmm. And so preparation is everything when it comes to purchasing a home. Some people, again, the credit's in a good place, the income's in a great place, so you qualify, but you just don't have the down payment, or you just don't have the closing costs. With that said, people still do get closing costs. Do you want to set your customer up to think that they put in, an offer and they're going to get it on their first try? No. But I also do not like to lead by saying it's impossible to get seller's assistance, because some people are still getting that. And if that's what you need, then you shop until you get that. And you just got to have a lot of patience,
It's true. You have to be very patient. And a lot of times what they do now is, okay, so you pay a certain amount for a house, mm-hmm. right? And if you're asking seller pay closing costs, they might ask you to include that in the price, which means that now you're, instead of paying for a house that's like, I'm just going to throw a round number of 200. Yep. Now you're going to be putting in a number of 207. We'll yep. just, right? And so now what you have to do is the seller, essentially, you're paying yourself. So you're paying for the closing costs out of your own loan. But now we have to think about the appraisal. Now the home must appraise for that extra $7,000. So there's a lot of ways to do about it, but a lot of moving parts as well. So like you said, it's not impossible, but how are we going to go about it? And also, you know,
and you're essentially, so what Jen is saying is that you're using the equity in the home to pay for closing costs. And like you said, you're paying yourself, or you're using your loan to do that. It's rolling closing costs into the loan. It's not always able to happen because you may be at your max purchasing power with the offer you put in. So you may not be able to go 5,000 over. You may not be able to go 10,000 over. We can kind of segue. Go ahead.
Oh yeah, this is actually what is contributing a large majority of homes to be overpriced.
Yeah.
Not necessarily overpriced, but the housing crisis now that we are in, that has swung, like I said, from a giant pool with a couple little swimmers to now a lot of swimmers and the same size pool. We are in a little bit of a housing bubble, but it's a different type of bubble where there's just not enough houses or affordable houses. It's causing these house prices to go up. And even though interest rates are really good right now, it's like you said, the cash to close now it becomes a problem, because what you're trying to buy is, you know, higher, and your closing costs will be higher. Your down payment will be higher at that 207 versus the 200.
So yeah, and I feel like I found when the interest rates are lower, you're going to pay more for your house. When the interest rates are higher, the houses are maybe going to be priced a little lower, or a little. It always balances out. So people kind of say like, oh, I'm going to get so much house because of the interest rate. It really, like, if you're paying a higher rate in a lower home, in a lower priced home, it's really going to be about the same as if you're paying a lower rate in a higher priced home. It's really kind of going to balance itself out.
Exactly. But let's talk about closing costs a little bit more.
Okay.
And like what goes into them. Okay. So it's, for example, what is on that? You talked about that LE. What is on that loan estimate?
So every lender has like a processing fee. And it's usually somewhere around, like, it depends, you know, but usually like ours is $14.95. That's average. And so that's the only thing that your lender is charging you to do your loan. Almost everything else you're shopping for on your own. So your insurance, which is your homeowner's insurance. There's taxes that you're paying, which is a part of your escrow, including your insurance. And then there's transfer fees, title fees, and things like that to get your loan actually processed, because you have to have a title company. And so a lot of it is escrows and transfer fees. And I wish I had an LE sitting right here next to me. I can look one up. But all of those things kind of go into your closing costs. And the holdbacks are usually like a year's worth of taxes, insurance, and things like that. And that adds up to kind of that 4%, or on average, that 4% of closing cost on the other side of your down payment. And that's how you get your total cash to close.
Yeah. And one of the reasons why your taxes and your insurance are now escrowed is, once again, we're going to take time travel back to 2011 when a lot of these homes were being bank owned. What the problem was is that the taxes wouldn't get paid, and then the city would would take first position, or insurance wouldn't get paid. And the home would get broken into and damaged during the whole Occupy time. So now these insurance and these taxes, they're making sure that the mortgage companies got smart and made sure that those things are being escrowed. Now there is a way that you don't have to pay those in an escrow, but that means you need to put a minimum of 20% down, meaning that there has to be some kind of equity in the home to begin with.
Ooh. Sorry, I was pulling up an LE, but just to go over a little bit more of, I know we're running short on time here, but just a little bit more of what is included.
Well, and talking about PMI and funding fees too. So if you are paying with a lower down payment, a lot of those fees have to be paid up front.
Yep. And I think it's actually 25% that you can forego insurance and taxes. Yeah. 20% you forego the PMI, and then the 25%, which is an ample amount of money, even on a $100,000 house, which is unheard of unless you're doing a condo or something like that. But then you still have HOAs, and that's a holdback too. So one way around that, though, is being able to qualify for, like we've talked about, some of the down payment assistance programs. With that, and I talked to Henry about that the other day, I think a lot of people don't understand that when you do get down payment assistance, most times it's what we would call a soft second. So it's a second mortgage that sits on the back of your house. So you're already into some of the equity of your home. If your home grows 3 to 6% equity in the next however many years, that would be a plus. But if it doesn't, then you have $10,000, $15,000, $20,000 sitting on top of your loan before you refi, before you sell. You'd have to pay that back.
Oh yeah, I get a lot of sellers that they're like, well, what do you mean that I won't get that full $10,000 back? And I'm like, oh, I have a seller who's selling. They just bought like a couple years ago, and they outgrew their home, and they took out down payment assistance in the form of a second mortgage. So even though I do the estimates and the home it has appreciated, the problem is that they're like, they don't understand what they paid for it is more than the equity that it's okay. I wish I could show you numbers. I'm a numbers, and I need a sheet first too. I'm just like you. I have to look at it in order to.
Well, and it's a good way to help you get into your home. But when you're purchasing a home, you want to think of it as what are your short-term and long-term goals. If you're purchasing because of a job and you're just going to be here for, a certain amount of time, is it the best idea for you to get down payment assistance? Maybe not, because your home may not appreciate, and then you're out of that money. It may be better for you to get a gift if possible, or to use a bonus from work if that is available to you, or your taxes
or your 401k.
Or your 401k if you save, So there's so many ways to go about getting. I just had a customer the other day. She was like, I can't get a gift. I don't have a family like that. And she forgot she had a 401k. And it's just coming out. And I looked at her pay stub and I was like, you have a 401k. And she's like, yeah. Oh. And so I was like, check how much is in there. And she had $12,000 in there. And I was like, that's so much money for you to be able to use towards a house. And she was super excited because she just thought it was a dead end, with being able to pay her own closing costs. So,
yeah. Okay. Well, we are running long, so we could do this topic like again and again and again because there's so much in it. But you guys, if you have specific questions or we piqued your interest at all, give Gigi at Sunwest Mortgage a call. Gigi, what's your phone number?
612-242-7569.
And I'm Jennifer Cotis at Keller Williams, and you can call me at 763-607-3226. I don't know why I have to do this.
I love it. The morning love dance.
All right. Well, I'm going to end this broadcast, you guys. I will see you soon. Bye.
Bye. Happy